In class 11 accountancy, we are on final accounts, and today I am going to explain you various types of numericals. Yesterday we completed trading and P&L accounts numerical. Today I am going to show you the balance sheet. Already I gave you the blank format of balance sheet, and today we will do the numerical related with the balance sheet. See the question, then you will be able to do that. See children, look here. This is the balance sheet. How to prepare balance sheet. Be careful because that topic will be in class 12 and in further studies. Without balance sheet, you cannot complete the part of studies of yours. So, see, preparing balance sheet. All the accounts of assets, liabilities and capital are shown in the balance sheet. Capital and liabilities are shown on the left side, which are known as liabilities. See, liabilities, as I told you, capital is an internal liability and external liabilities are non-current liabilities as well as current liabilities. So, liabilities are to be shown on the left side and assets are to be shown on the right side. See again, this side is for liabilities, amount, assets, amount. You can see the previous videos. Okay. So liabilities and capital are to be shown on the left side, which is known as liabilities. Asset and all other debit balances are shown on the right side, which are known as asset. There is no prescribed form of balance sheet for a proprietary and partnership firm, but for the company accounts, we have given the prescribed format. How to show the asset and liabilities. But we should show the asset and liabilities in a proper form, proper way, in horizontal format. Okay, so the showing of the assets and liabilities in sequence is known as marshalling of assets and liabilities. See, this is the format of balance sheet. See, liabilities side, capital, note down, add net profit minus drawings. Why? Because with the help of profits, capital will increase, and if there is net loss, the capital will decrease. Simple concept as I taught you in accounting equation. Same here. And drawings means withdrawal of amount in cash or goods for personal use, for domestic purpose, for household purpose by the proprietor is known as drawings, and that should be subtracted from the capital because the proprietor is taking out for personal use. Then long-term loans, short-term loans, current liabilities like creditors, bills payable, which are known as trade payables, and bank overdraft. Bank overdraft is a liability. I gave you that term in the chapter Bank Reconciliation Statement. Bank overdraft is the facility given by the bank to the current account holders so that they can withdraw more than their deposits up to a limit. Okay. Now come to the asset. Furniture, cash, land, goodwill, patent, copyright, debtors, bills receivable, combined they are known as trade receivables, land and building, plant and machinery, closing stock. Now see. Now see, this is the trial balance. Now with the help of trial balance, we will prepare balance sheet. One by one I will show you. Cash, asset, capital, liabilities, bank, asset. Or you can see very easy way, debit items will be in asset side. Credit items will be in liability side. Okay. Now creditors are the liability in credit side. Salaries will not to be shown in the balance sheet. It is already to be shown in the profit and loss account. Then loans, 5,000 liability. Furniture, see loans given in the credit, that's why it is liability. If loan is given in the debit, that will be termed as loan given to other person. Okay, so that will be asset in that case. So be careful, whatever the item or account title given, first of all you have to check. If that is in the debit side, it will be asset. And if it is amount given in the credit side, it will be liability. So here, that is the confusion. So many students told me that, ma'am, there is the problem in loans. See, loans, if it is given in the credit side, it will be termed as liability. Note down, please. And if it is given in the debit side, that will be termed as asset, loan given. This credit loan is termed as loan taken. And this 10% is rate of interest, and it is the date given for calculation of interest. But the loan amount is in credit, that's why it is a liability. If loan is given in the debit, that will be asset. Now furniture is asset, debtor is asset, okay? Bad debts, purchase, these are not to be included because already purchase included in trading account, bad debts already included in P&L account. Now see the balance sheet. See, this is capital, profit given, then we should add it, loans, just now I explained you, that is, loan is liability, creditors, liability, furniture, cash, bank, debtors are the asset. If the closing stock given in the question, then it is also asset. Total of both the sides should be matched. See, total of both the sides, liability side as well as asset side should be same. If that is difference in between these two, it means there is some error in the accounts. Okay, so now we are going to show the relevant items in the balance sheet. See, first, which are included in the balance sheet one by one. Note down, please. Current assets. Okay, what do you understand by current asset? Current assets are those assets which are either in the form of cash or cash equivalent, like bank balance. And these assets can be converted into cash within a year. Within a year, 12 months, like cash in hand, cash at bank, bills receivable, stock of raw material, semi-finished goods, finished goods, debtors, short-term investment. Short-term investment means those investments whose maturity period will be up to 12 months, prepaid expenses, etc. Okay, now children see. In the exam, That question may come from various types. What do you understand by current asset? Okay. Give two examples of current asset. Why the stock of raw material termed as current asset? Okay. Debtors are current asset or fixed asset? True or false? Okay. Like prepaid expenses are termed as current asset. True or false? Even in match the columns, we can give you this question. So please note down the meaning of current asset, examples of current assets. Okay, note it down. Now see. Next is current liability. Just opposite of current asset. Another thing is current liabilities. See. Current liabilities are those liabilities which are expected to be paid within a year, within 1 year. Like current asset, opposite of current asset is current liability, which are expected to be paid within a year, which are usually to be paid out of current asset. Example of current liabilities are bank overdraft, because that have to be paid within 1 year. Otherwise, bank will charge interest. Bills payable, sundry creditors, both are also known as trade payables. Short-term loans, those loans whose maturity period is up to 1 year, sanction period is up to 1 year. Outstanding expenses means those expenses which are to be paid within as early as possible. Outstanding means due but not paid. Current liabilities are to be shown this side. This is the liability side. Now next, third one, fixed asset. What is the meaning of fixed asset? Opposite of current asset. Don't think that fixed assets are those assets which are fixed at one place. Don't give that answer. Fixed assets are those assets which are held on a long-term basis in the business. Not only up to 1 year. That is current asset. Fixed assets are those assets which are for long time period in the business. Such assets are not acquired for the purpose of resale. Okay, you are sitting in a room, see in your nearby what are the fixed assets you can see. First of all, you can see AC, furniture, laptop, land and building, plant and machinery, all are termed as fixed asset. Vehicle. Now, in your environment, see nearby what are the current assets you have. Yes, cash balance, very good answer, bank balance. Yes. So fixed assets are those assets which are held on a long-term basis in the business. Such assets are not acquired for the purpose of resale. Land and building, plant and machinery, furniture and fixture. Sometimes the term fixed block or block capital is also used for that. See, various terms are there for fixed asset, net worth, fixed asset, all are the terms given there. So fixed assets are those assets which are held on a long-term basis in the business. These are not acquired for the purpose of resale. Do you think vehicle we purchase today can sell out tomorrow? Today I am going to buy Mercedes, tomorrow I am going to buy Jaguar. Not possible. Generally, the assets which we purchase for our own use, not for resale purpose, like land and building, plant and machinery, furniture and fixtures, electrical appliances, vehicles, FD, fixed deposit in the bank, all are termed as fixed assets. Now, fixed assets are of tangible and intangible also. So see, intangible assets are those assets which cannot be seen or touched. Goodwill, patent, trademark are the some example of intangible assets. See, those assets which we can see or touch, like cell phone, vehicle, all are tangible. Furniture, tangible. But these assets which we cannot see or touch, goodwill, patent, copyright, trademark, are also assets. Then investments. Investments represent the funds invested in government securities, shares of a company, or to some other use. They are shown at cost price. Okay, market value is lower than the cost price. A footnote to be shown. See, after the balance sheet total, there is a place you can show contingent liabilities there, even you can show the note that is known as footnote. Okay, so now long-term liabilities. All liabilities other than current liabilities are known as non-current liabilities, or we can say long-term liabilities. Such liabilities are usually payable after 1 year of the date of the balance sheet. Long-term loans from the bank. See, banks are also giving facilities of different durations for loans. If you are able to pay back that loan within 1 year, that is termed as short-term loan. And if you are taking loan for long term, more than 1 year, for 3 years, 5 years, 20 years, that will be termed as long term liabilities. Clear? So, long term liabilities means those liabilities which are not to be payable within 1 year, which is other than current liabilities or short term liabilities. Now, capital. Capital is the excess of asset over liabilities due to outsiders. Capital is the amount originally contributed by the proprietor to start the business, initial investment by the business, and according to accounting equation. Do you know the accounting equation? Total asset is equals to liabilities plus capital. Do you know that? Now how to calculate capital? Total asset minus outside liabilities. That's why we can say the capital is the difference between asset and liabilities, which is known as outside liabilities, or in common terms you can know that capital is the amount invested by the proprietor. Okay, now drawings. Opposite of capital. Amount withdrawn by the proprietor is termed as drawings. For household purpose, for domestic purpose, for personal use, and it is shown by way of deduction from the capital. Way of deduction from the capital in the balance sheet. Yes. Now the term, different term, marshalling and grouping of asset and liabilities. See, marshalling and grouping means assets and liabilities can be shown in different way. Okay, so today we completed the balance sheet, format of balance sheet, one numerical of balance sheet. See again how to prepare balance sheet. Look at the screen, you should note down. Balance sheet is prepared to know the financial position of the business. Okay, so it is divided into two parts: liabilities and assets, amount and amount. Okay, so yes, left side is for liabilities, right side is for asset. For sole proprietor and partnership, there is no prescribed format. We can prepare it by this way as horizontal, but in class 12, you will get the balance sheet of the company according to Schedule 3, according to Amendment and Companies Act 2013. Okay, so how to prepare the balance sheet, how to show the balance sheet, this is the format I gave you. Okay, I will tell you how to make it. See, first of all, balance sheet of name of the organization as on or as at, because that shows the financial position on a specific date. This side is capital plus profits minus drawings, then long-term loan, short-term loan, creditors, bills payable, bank overdraft. Okay. This side is for asset, furniture and fixtures, cash, bank, goodwill, copyright, patent, debtors, bills receivable, land and building, plant and machinery, closing stock. Closing stock to be shown on two sides here. Yes. Now, one question already, this one we have done. Cash, debit, asset. Bank, balance, debit, asset. Furniture, asset. Debtors, asset. Okay, loan given in the credit, that's why liability. See. Now, what are the items we have to show in the balance sheet? Look at the screen. Relevant items in the balance sheet. First of all, CA means current asset. Those assets which are paid within a year. Different names are there. Then current liabilities. Those liabilities which are to be paid within 1 year. Say, fixed asset, not for resale purpose, used for long time period. Intangible assets, which cannot be seen or touched. Example of intangible asset: goodwill, patent, copyright, trademark, computer software. Tangible asset, give the example of tangible asset. See, these are the tangible assets, which we can see, feel or touch. Okay, now investment. Long-term liabilities which are to be paid within after 1 year, capital, amount contributed by the proprietor, drawings, amount withdrawn by the proprietor. Tomorrow I will explain you marshalling and grouping. Okay, so today we completed the balance sheet. This one is the balance sheet, you can see. Okay, I am going to show you again. Liabilities, capital plus net profit minus drawings, outer column. Okay, this is the rule. If that in place of net profit, that is net loss, you should subtract. Then creditors, bills payable, loans from other institutions, bank, OD means overdraft. Okay, liabilities this side, total liability. Total. Then come on to the asset side. Asset side is cash is your asset, bank is your asset, debtors, closing stock, furniture and pictures, land and building, plant and machinery. These are the ones. Okay. So this type of format you can get for the balance sheet. We can give you the items and tell you to prepare the balance sheet. See, the format of balance sheet will never be changed. That will be the place. Asset side here only, liability side here only. Okay, you cannot show the creditors that side, debtors this side. Bills payable this side, bills receivable that side. Creditors this side, debtors this side. Okay, bank loan, bank overdraft this side. Then bank balance, bank deposits that side. Okay, and here capital means the amount invested by the businessman. Add net profit less drawings. Drawings means amount withdrawal by the proprietor for personal use. Yes. So that we can say if the balance sheet of both the sides not matched, then it means there is some error. I am sure you all will be able to understand and do the numericals.